Okay, so good evening, guys. It's a new week, and I would love to analyze gold as usual. Gold is actually my favorite pen. So, without wasting much of your time, let me go straight to the point. So, I would like to do a review of last week. Last week, we took out buy side, and then right around here, I said I was expecting price to buy into a 30-minute fair value gap before selling. And obviously, you can see how we had a nice sell week. And this fair value gap was actually my draw on liquidity, and we delivered nicely. And gold has been making lower lows. But until Friday, we actually had I don't know, I don't know what to call it. Is it a market structure shift or liquidity pod? So can't really say. So I don't really do my analysis from the lower time frame. I love to start from the weekly time frame. So on the weekly time frame, if you take your Fibonacci from the slow to that high, you would see we actually traded to discount, which is 62% retracement level. We created liquidity, then we came back and we took out that liquidity. So we created liquidity, and then the market came back and took out the liquidity at discount. Then we had a rejection from that level. And if you look closely, this is what we rejected from the inversion fair value gap. That was what we rejected from. And you can see how the body of the candles, we are respecting it. Plus, it is at discount. So if I am expecting bullish prices, I love to see price respect um bullish PDREs. So this is an example of a bullish PDRE, inversion fair value gap, sell side liquidity. So let me take out the Fibonacci so my chart wouldn't look um confusing. So now let's zoom in and see what the market is trying to do. We have this fair value gap here, okay, and we have the low of the fair value gap. This is a weekly fair value gap, please. It is an inversion fair value gap. Please don't get me wrong. It is an inversion fair value gap. So on this time frame, I don't know where the market is likely to draw to because we don't have any fair value gap here and we don't have any fair value gap here. Though we have this sell side and we have this buy side. So I don't know which one the market would likely go for. But if you ask me, I would be preferring to see bullish prices because the market stayed inside this fair value gap and we are at discount. So I am expecting bullish prices. So let's drop down to the daily time frame. On the daily time frame, you can see how the body of the daily candles are respecting the weekly fair value gap. This is the weekly fair value gap. This is the high and this is the low. So let me just write them down so we don't get lost. So this is the high and this is the low. Just look at how nice this candle stayed inside the fair value gap. Plus we have this daily order block here. So the market is obviously respecting um the bullish PDREs, as you can see, and that's actually a nice thing to see. So if you ask me on this time frame where the market is likely to trade to, We have this fair value gap. I don't think this fair value gap is likely to be visited because we actually filled it in by this move here. Now we have this higher fair value gap. This is the high of the fair value gap, but consequent encroachment is, I think, 50% of it. 50% should be right around here. So if the market is to continue higher, then that would be my draw on liquidity for this week. Plus we have this equal highs here. So I am actually expecting bullish prices. Now let's go to the 4 hour and look for more details on why we should be buying. So now this is the weekly and sorry, this is the 4 hour time frame. Let me bring all this here. So on the 4 hour time frame, we have this order block, this whole candle here, and we have this tiny order block. If we refine it, this is the don't get me mistaken, this is the daily order block. Now let's refine it to a smaller order block. You can see we actually traded to it here and we had a rejection. But better still, let's use this bigger order block, this one here. So this is the weekly fair value gap. Now look at how nice these candles are respecting the fair value, the inversion fair value gap. You can see the body of the candles, how they are respecting, like it's so neat. Look at this, the body of the candles. They stayed inside the fair value gap. And now we have what a market structure shift, and we have this market structure shift here. So I am actually expecting this price to take out liquidity from this level, probably take out this low or this one before going higher. Now that's my thought if the market is to continue um bullishly. That is if it is to continue bullishly, and then this would be my weekly draw on liquidity. Okay. So the midpoint of the fair value gap should be my weekly draw on liquidity. Now if you take your Fibonacci from this low to that high, we are at discount. So at discount, we should be respecting all this. But this was just a consolidation and a choppy movement. So I don't really know where price would reject from if it is to buy. Now let's drop to the 1 hour time frame and look at what we have there. You can see on this time frame we have a trend line liquidity. This is liquidity. So I don't know if the market would want to do something like this. Take out the liquidity before going higher, or better still, if you look at the 30 minute time frame, we took out buy side liquidity. So I am having two thoughts on this particular pair. We took out buy side, then we had a market structure shift. Then we have a market structure shift. So if this market is to continue bearishly, we should trade to this fair value gap here, just like last week. This is a similar price action to last week. So we might, if we are to continue lower, I'm expecting something like this. So I don't know which one will be possible, but I'm having two thoughts, and then till the market opens up, and then when I wake up tomorrow morning during London session, I would know which one to actually focus on. But for now, I don't. I am neutral. It's either the market sells before buying or it buys before selling. So those are my thoughts on um gold USD. So on DXY is actually heading for the volume imbalance. We have this volume imbalance here on DXY. So if this is to continue higher, then gold should sell. But I am actually expecting the market to sell so that gold can buy. So I guess I hope you learned something from this lecture and from this analysis, and I hope it helps you during the week. Till I catch you next time, stay safe and please like and